So the Bank of Canada has increased the key lending rate by 100 basis points. This is the largest one-time rate hike that we have seen since the late 90s. And this has surprised many people. Heck, it even surprised me because I was at least expecting 50 to 75 basis points, and over the next few days you're going to see some pretty wild and stifling headlines. Now, what does this mean for the borrower? Well, now prime rate is 4.7%. Firstly, I just want to mention that when the Bank of Canada raises this rate, it affects variable rates, not fixed rates, and also it affects home equity line of credits. So if you have a variable rate mortgage that doesn't have a fixed payment schedule, your payments can actually fluctuate, and you're looking at about a $55 to $60 per month increase for every $100,000 that you have borrowed. So for instance, if you have a mortgage of, let's say, $500,000 with a variable rate that doesn't have a fixed payment schedule, then your payments are likely to increase about $300 per month. But not every variable mortgage household will automatically change, and just double check with your mortgage broker to see which camp that you fall into. But if you have a variable rate with a fixed payment schedule, then some variable mortgages will actually allocate more of the monthly payment to the interest portion instead of paying down the principal. So this will also impact those who are already pre-approved on a variable rate. It will now affect your qualification by about 10%. So you're gonna need to reevaluate your qualifications. Now, if you're considering selling a property and buying another home in this market, it doesn't really impact you all that much because it's all relative. If you have a home to sell and get slightly less, then you're also gonna be purchasing something slightly less as the market is doing what it's doing across the board. Now, if you're looking to move up in the market, meaning from, let's say, a condo or a townhouse to maybe a detached property, then you're actually going to be netting ahead. So let's just look at an example. So the average cost of a Durham detached home in February was $1.3 million. Now it's $1,060,000. That's a difference of 18% or $240,000. And if we look at the average cost of a townhouse in Durham in February, it was $845,000 versus now, which is $694,000, and that's a difference of 17%. So percentage-wise, they are down the same, but on a dollar value, they're actually very different. So let's say you wanted to move from your condo town in February and sold it for $845,000 to purchase that $1.3 million detached home. That's a price gap of $455,000. But now let's say that you want to sell your townhouse now in this market and you sold it for $694,000 and purchased the same detached house for $1,060,000. That's a price gap of $366,000. Now these are just average numbers, but this spread could even be less, and there are many great opportunities right now that weren't there at the beginning of the year. So patience and time are two things that really weren't possible before. Now, I believe that prices will continue to be impacted throughout the year. However, it's not a terrible market, and prices won't really just magically become more affordable. Is it challenging? Yes, of course. And depending on what side of the fence that you're sitting on, whether that is buying or selling, it's going to have its own obstacles. Now, the question I've been getting asked is, how long is this downturn going to last? And the answer is nobody knows. The market will be crickets relative to what we were experiencing the last 2 years, but it's going to hum along quietly for the foreseeable future as people reassess and recalibrate what's important to them and their lifestyles. Now, one thing to note is that we all need a roof over our heads. So whether you are a homeowner or you rent is entirely up to you, but owning a home, you're paying 5% interest to the bank while growing your net worth, and versus renting, you're actually renting that home and you're paying 100% interest to your landlord, and rent values have also now skyrocketed as demand is flooding that segment of the market. So there you have it. If you have any questions, concerns, want to chat about real estate or how to get into the market, get in touch using the Calendly link below. Until then, ciao for now, and we'll catch you in the next one.